This will be my next Bitcoin trade idea. As discussed on Monday's video, Bitcoin did indeed get rejected over here at the quarterly level after putting in this fake break of structure. My plan for now remains the exact same. I still truly believe that there's lots of liquidity resting here beneath this low. Now, why is there liquidity resting beneath that low? That is all due to the fact that we had a fake break of structure over here. Why is this a fake break of structure, you may ask? Because the high over here that we broke through, because we opened and closed candles above that high, so that is important. But the high where we opened and closed candles above did not bring us to a new low compared to this low that brought us to that high. So it's simply not a significant high to break and therefore a fake break of structure. But retail traders don't realize that and they start opening up breakout long positions on Bitcoin over here or on the pullback over here. Now get into the mind of the retail traders. Where are these traders going to put their stop loss? They're going to put their stop over here beneath that low. Now this is not the only reason why I think there's lots of liquidity resting right there. The second reason being is this massive wick that we have seen over here on the 6 hourly and also on the daily time frame. We know that these wicks, they are a big draw on liquidity. Now why are these wicks a big draw on liquidity? That's due to the fact that a wick is indicating a fast price move. And because price is moving too fast, smart money and the bigger players inside of this market, they do not have the time to fill their orders. It takes time for their orders to get filled. Now why does it take time for their orders to get filled? Because those orders, they contain millions and millions and millions of orders. Do you really think that if they want to buy millions and millions worth of Bitcoin or any other coin, it will take minutes and hours and sometimes even days for them to fill their orders? Now, due to the wick, we know that there are still unfilled orders left behind. So what does smart money do in that case? They push the price back to the liquidity pool to fill their unfilled orders before reversing the price back towards the upside. Now that 50% wick fill level is always a very pivotal level. So I'm going to mark out that 50% wick fill level right over here on the chart. And this is my first area of interest for a long. Now, when we start looking for an invalidation for a potential swing long, I think that this is the significant low that we need to defend in order for the bulls to remain bullish. Many people thought that this was the low to defend. I will tell you guys why this was the low to defend. Because this is the low, right, that started this impulse to the upside that gave us this break of structure. Because when we analyze the market structure over here, we can see that we form an all-time high, higher low, lower high, lower low, lower high, and then a lower low. This is the lowest low that we form. This is the high that brought us to this low. So this is the high to break. That's a significant high to break. And the low that I just marked out is the low that started this impulse that shifted structure and broke through this high. So that's the low to defend. Now many traders that are going to be looking for longs up on the sweep over here in the 50% wick fill level, where will the greedy traders put their stop? Exactly, they will put their stop at the bottom of the wick. That's also not what you want to do, because if there's many people placing their stops at the exact same area, there's a decent probability of that area getting swept as well. So that means that the bottom of the wick is my second area of interest. First area of interest, 50% wick fill level. Right, invalidation over here, and as a target, a new all-time high for Bitcoin. That would mean that we are already looking at an RR of 5. Now the second entry at the bottom of this wick, if we are looking to enter right there, up on the sweep, same invalidation over here, right, and same target, then we are looking at an RR of 8.19. This is the trade idea that I'm looking to play on Bitcoin over the upcoming days and weeks. I believe that if we do not hold on to that low that I marked out, which gives me a very clear and clean validation, the Bitcoin will visit much and much lower targets, and we might even be visiting 50k again. For Ethereum, I have a pretty similar view. For Ethereum, we can see that we also put in this wick to the downside on the daily time frame. When I once again mark out at 50% wick fill level, and we go back to the 4 hourly time frame, what can we see? We front run that 50% wick fill level over here. We create an inducement, right? Put in one fake break of structure, put in another fake break of structure, engineering liquidity to the downside. Now the stops of that second break of structure have already been taken out over here. But I believe that there are still stop losses resting over here, right above the 50% wick fill level. The invalidation for Ethereum is a little different. I think you want to hold on to the origin of this impulse over here. This is where the demand was coming into the market and where we got that ETF pump towards the upside. Now these kind of pumps, these kind of new pumps, they also always get retraced. Why is that the case? Because the people, the smart money players, the bigger players inside of this market that were not positioned during this pump or before this pump, they will not let the price leave without them being filled. So what do? They retrace at least 50% of the move, sometimes even 100% of the move, to fill their unfilled orders, get in on the move, and then they start reversing the price back towards the upside. Okay, so you want to defend that origin, the demand area of that impulse towards the upside, which gives us a pretty clean invalidation over here. Now let's say for Ethereum, we're looking at a similar scenario, right? Fill our first order at the 50% wick fill level, right over here. Okay, this is your invalidation, and as your target, first target is a range high, which is an RR of 3.17. Second target is a new all-time high, which offers a lot higher RR for Ethereum. And the second entry is indeed at the origin of that impulse. So not at the 100% wick fill level, because that really doesn't provide a much better RR than the first entry, so not really worth it. Second entry, for example, at the origin of that impulse towards the upside, same target, and that offers a beautiful RR of almost 10. Now, very clean, very clear trading plans on both Bitcoin and Ethereum, combining the range theory in confluence with a wick filling strategy, in confluence with liquidity and market structure. Still expecting higher prices on the higher time frame because the daily trend is up, the weekly trend is up, but you always want to follow the liquidity, remain patient, stick to your plan, and see if we get filled or not.